SIP is something that I think we have to talk about. Yeah, I mean, you already spoke a little bit about it, but then SIP, I think, is one of the most brilliantly marketed products, and rightly so, in the last few years, right? One of the best ways of actually becoming a part of of making it part of your investment journey, investing in mutual funds. So, tell us a little bit more about SIPs and how SIPs can truly benefit an investor in the long term wealth creation journey. So we all know about SIPs, but we want to hear from you in terms of what you think and how SIPs can help all of us.
See, actually, I spent 33 years working, and there have been periods of time when the markets haven't done well.
Yeah.
In recent times, it was 2020, March, April to, let's say, August, September.
Yeah.
What SIP does is it ensures that you invest when the markets are not doing well.
Yeah.
And those installments which you have invested when the markets have not done well, they give you valuable returns when the market turns and gives investors a very good investing experience. So what is SIP? It ensures that it removes the emotions from investing and ensures that you are invested when the markets are down.
Yeah.
So if you are an SIP investor and you say I'm going to invest only when the markets are up, that's not SIP investing. That is momentum investing.
Yeah.
So I think what SIP has done and what the mutual fund industry has managed to popularize is that basically it has improved the temperament of investing, because look at the 2020 installments in March, April, May, June, the kind of returns you would have got on the installments that you have invested in those 4 months is awesome.
Yeah.
Because my Nifty was below 10,000 at that point of time. So look at the kind of returns you would have got on those installments. So I think it primarily improves the temperament quotient of your investment and essentially ensures that you have invested when the markets are down. The second is it has also improved the savings habit in investing.
Yeah.
Many of the people whom require to create a savings habit in their earning years, and somehow the SIP habit has ensured that people save during the earning years. So there is an earning year, there's a retirement period. So it has ensured that people have a savings habit during the earning years. So I think the combination of creating the right temperament for investing and creating a savings habit during the earning years has resulted in a superb combination for long term wealth creation. And I think I should compliment the entire mutual fund industry for working very hard to creating and popularizing this product over a period of time. That all long term investors who have done SIPs, but remember, it's very important when markets fall, they should continue with their SIPs. If they do it only when the markets are up, that is not SIP.
True. I mean, it has to, the rupee cost averaging that we talk about has to happen, right? I mean, in
Yes.
my interactions with people, right, with so many investors that I've interacted with over the last 7, 8 years, people tell me, I don't want mutual funds, I want SIPs, you know? So, so SIP has become such a big craze where people really want to learn. They really want to, have SIPs in their portfolio, which is great. I mean, it is one of the best ways of bringing in discipline to your investments more than anything else. So yeah, and I can see that even from the conversation we've been having in the last half an hour, you've spoken about SIP 2 3 times. So I know that you're a true believer of SIPs, which is great. So, there've been a lot of new investors who've been added in the equity space in the last 2 years, and we all know that there've been many investors who've just started their investment journey in 2020, right? And they've seen good 2 years, 2020, 2021, and then we have this year where so many things are happening. We have the geopolitical crisis and inflation's going up. So, obviously the investors are really confused at this stage. When you've just entered the market and you've seen good times, and then within 2 years, you also see the downturn. So, as an investor, what should be my mutual fund strategy then?
Actually, if you're not confused, it's a problem. Actually, people have to be periodically confused. Too much of clarity is a big problem. In fact, I keep telling my colleagues, you can't be saying that I'm very clear, because most of the time markets are complex.
Yeah.
And so I think, we are headed for a period of, it's very interesting. We've been telling people, the world's biggest fund managers are not fund managers of equity. It is actually the US Fed.
Yeah.
They have $8 trillion. So in 2020, the US Fed, Mr. Jerome Powell kept saying, I want to create inflation, I want to create inflation. So when he was creating inflation, he managed to push all the markets in the world up. Now, if you look at what US Fed does and what all the governors keep talking, they want to say, we want to kill inflation, we want to kill inflation. So what happens is they basically bring the markets down.
Yeah.
It's really funny. In just 2 years, they changed the narrative from creating inflation to killing inflation. And essentially, that has resulted in markets going down across the world.
Yeah.
So, is it important that you have bad times? I think it's bad times are much better. In fact, we did an analysis at ICICI Prudential and we found that the best times to invest are bad times, and the worst times to invest are the best times.
Yeah.
So, if you go back and look at 2007, anyone who invested in 2007 were the people who lost money.
Yeah.
People who invested in 2008 after Lehman, they always made money. So, in fact, the people who invested after the World Trade Center bombing anywhere in the world made money. So, one of the interesting things is when you're investing, you have to have bad times. So, if you have very good times, actually, it's the worst time to invest in equities. So, somehow, people think that you should have good times to invest in equities. The best times to invest in equities is when there is a global big event which has hit you. If a big global event hits you, you have to invest a lot of money in equity. And this is the learning that we had by looking at markets across over long periods of time. So people fear bad times. Actually, I tell all my colleagues that the best times to invest are the worst times.
I think it's more psychological more than anything else, right? I mean, logically, of course, what you're saying is absolutely right. I mean, we should invest when the markets are going down. But I think it's more psychological from an investor's point of view that markets are going down. What if it goes down further? Then I'm going to lose out. And that's probably a short term scenario, but then that's the assumption that most investors have. So in 2021, the general worry was inflation, and currently, of course, the war, the geopolitical crisis, took it to the next level, right? Now, of course, because of this, all the leading central all the leading central banks are fighting inflation at this point in time. Now, crude oil is one of the most, or one of those key influencing factors for inflation, right? So, keeping that in mind, OPEC Plus has announced that it's going to slash the oil production by 2 million barrels per day. And what kind of impact do you think it's going to have on an Indian economy, right? And will it further increase inflation, or therefore the interest rates will go up? So, what do you see? So, what is your take on this?
See, our view at ICICI Prudential is war is much more important. The war ends, oil can come off.
Yeah.
See, in fact, all the people who talk about 2 million barrels per day cut, they all have written saying that the maximum cut which will happen is only 1 million barrel.
Okay.
Because many of the people are not producing also to the extent of the OPEC quota.
Yeah.
So they can't fall by 2 million barrels, is what they say. I think the war is much more important. If the war ends, I think that will be a much more powerful catalyst for oil to fall rather than worry too much about what the OPEC quota is. And that's what we see at this point.
I mean, hopefully it would have a cascading effect. If the war ends, then we are going to have a cascading effect, and we should see the oil prices coming down. Yeah, but I guess it is something that a lot of investors do worry about, right? I mean, anytime nowadays, I think any news that comes up tends to worry us, right? Because there's already so much that's happening that we don't want anything else to add on to it. And my next question is actually related to that. So inflation, interest rates going up, all of that, and then suddenly we hear news about Credit Suisse, and it's bringing, the whole scenario, which is bringing back the Lehman Brothers fear, right, of 2008. So you think the Credit Suisse crisis could actually trigger another financial crisis for us? Should we be worried as investors, or do you foresee something as big as Lehman Brothers here?
Actually, post 2008, the global regulators have been so careful on financial system that I actually don't expect a Credit Suisse. I don't expect a Lehman kind of event in the financial system. There can be some other kind of event which I can't foresee.
Sure.
But I believe that the financial system has been so tightly regulated post 2008
Yeah.
that I think that problems are not going to come from the financial system.
Mm-hmm.
Can they come from some other part of the system other than banks? I do not know. But I think the banking system capital requirements have gone up.
Mm-hmm.
The extent of leverage in the banking system is much lower than 2008. I think the non-performing loans in the banking system are much, much lower.
Yeah.
Look at India also. The non-performing loans in the banking system today are possibly at its lowest in the last 10, 12 years. So I think the banking system is today in one of the best shapes in India. So we are in a very different situation from what we were in 2008. So I think, people always equate problems with the past.
Mm.
We could have some other problem which we don't know about. And that's the beauty of financial markets. Go back 1 year back, I would not have known where is Ukraine. And that is the reality. And that's why I'm not saying there can't be problems. I'm saying the problem will always be something that you and I did not talk about today.
Yeah. 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 Absolutely. So we just hope what you're saying is right, and we don't see another Lehman Brothers happening because I think as an economy we've seen enough. So yeah, fair. So in a recent Morningstar conclave, you said that since 2008, central bankers have become fund managers. What exactly do you mean by that?
See, actually, whenever at the first sight of trouble, they started printing money and ensured that the markets didn't go down.
Yeah.
So in November 2021 was the first time that the US Federal Reserve said, no, I am going to stop printing money. I'm going to start worrying about inflation.
Yeah.
Look at it after that time, how the markets have behaved across the world. It's become volatile.
Yeah.
So I think, basically even today, the central banks decide how much volatility is there in financial markets.
Yeah.
Because for too long, they printed too much money.
Yeah.
So now that has resulted in a situation that they determine the volatility in the financial system. They can reduce the volatility in the financial system, or they make the markets go up by changing and saying we will do quantitative easing or something like that. So that's why I think today the central bankers have become much, much more powerful in determining equity market trends and various other trends at this point of time. Currently, they are worried about inflation, which is why the markets are headed downwards. The day they cease to worry about inflation, we could have a much more positive markets. When will that happen? I don't know at this point of time. Okay. But at some point of time, they'll cease to worry about inflation. At that point of time, we will have a better market.
But you think they're doing the right thing? I mean, instead of printing notes, now they're saying, okay, we'll worry about inflation. So is it the right move?
It is the right thing. But everything in extremities. 2 years back, why did they print so much of money? As though printing money had no side effect. For the last 40 years, we should have been just printing money. I believe that, somewhere the central bankers erred in thinking that printing money has no side effect.
Yeah.
And that was the problem they made. And today the world is facing the music for the excessive money printing done by the central bankers in the Western world over printing money.
Yeah.
Unfortunately, the problem is even India has to face the music for the extra printing of money done by the Western world.
Yeah. Fair. Yeah. So I think it's a good thing that we are now fighting inflation. Hopefully, once we have inflation under control, things should, look a little more positive. But then, of course, everything has to fall in place for that, for sure.
Yeah.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.